Hey guys, I'm Nirav Karkera and I'm the head of research at Fisdom. So here's what's happening. Trust Mutual Fund has finally made its grand debut into the world of equity funds. And to take this conversation ahead and understand their advent into the world of equity funds and their very first equity fund offering, the Trust MF FlexiCap Fund, we have with us someone who is a super senior investment manager. You can think of him as a senior and veteran investment manager. He has worked across several organizations and large investment brands in the world. So, with us today, and I would like to warm heartedly welcome Mihir Vora, who is the Chief Investment Officer of Trust Mutual Fund. So, welcome, Mihir.
Thank you for having me.
So, Mihir, the grand day is finally there where Trust Mutual Fund makes its grand debut with its equity mutual fund. And it is the FlexiCap Fund, which is by far the most flexible mandate that SEBI has offered AMC to operate with, right? So, before we talk about the FlexiCap Fund, let's zoom out a little and talk about the overarching principles and philosophies, right? I recollect our previous conversation where you were talking pretty emphatically about in terminal investing, right? So could you just throw some light on terminal investing? What's it all about, and how would you like to define it?
Certainly. So first of all, India is a growth market, and in a growth market like India, there are always many sectors and stocks which actually grow much faster than the rest of the market. And at heart, we at Trust are growth investors. So the approach to investing for us is that of checking the longevity of growth. So there are various shades of growth investing. There is pure growth investing, where you only invest in the highest growth stocks, where you see profits growing for in the next few years at a high rate. Then you have growth at reasonable valuations, right? Where you not only look at the growth for the next few years, but also check the current valuations of the stock and see whether the growth in the next few years is discounted or not. But when we talk about high growth segments and stocks, there are many cases where the trajectory, where the runway of growth is far, far longer than you can imagine, right? And that's where maximum amount of multi-baggers are created, okay? So the difference between a growth at a reasonable valuation kind of an approach and terminal value investing is that in GARV, as we call it, we look at the growth trajectory for the next few years. But in terminal value investing, we not only look at the next few years, but try to have an idea of the longevity of the runway. How long is the runway of growth? Because we have seen time and again that in high growth segments where the longevity, where the runway is very long, a disproportionate amount of the valuation of the company comes not from the profits which are expected in the next few years, but the valuation actually comes from the profits which are beyond the forecast period, beyond the terminal value. So the terminal value basically applies to value of the profits which are beyond the forecast period. Typically, nobody forecasts beyond 10 years. So if you say the value of the profits beyond the 10th year, and you try to guess what the current value is, net present value of those profits is, that's what we talk about terminal value. And as I said, in high growth stocks and segments where the runway is long, that value can be 80-90% of the market cap currently.
Very interesting. So for whoever's watching and tuning into this conversation, would it be fair to say that this is a super hybrid of growth and value investing? This brings the best of both worlds in a way. Would it be right to interpret this in that way?
I would say it's more a form of growth investing.
Okay.
But growth at reasonable valuations. But in the valuations, you actually pay a lot of attention to the far out profits, not only on the near term profits.
Right. Right. So there's also something very typical about your investment style, and while the terminal value investing as a concept caught our attention, there's also another concept that you have introduced with the FlexiCap funds, and that's about identifying and investing in gorilla companies. So this is really intriguing. One, why would you call it gorilla companies? What kind of companies are we talking about, and why would you call them gorillas?
Very good question. As I said, terminal value stocks are stocks which grow not only for 5 years at high growth rates, not only for say the next 5 years, 7 years, 10 years, but they grow for 15 years, 20 years, or even longer, right? So these stocks, of course, will be multi-baggers, but they are rare, right? So in the jungle, there are lots of monkeys, different kinds of monkeys, but gorilla is the rarest one,
Oh.
right? So you need to go deep into the jungle to find a gorilla. So that's one characteristics of the stocks with high terminal value. Second is because these stocks grow at high rates for such long periods of time, they become large and dominant, like a gorilla, right? And third is when we talk about the runway, the length of the runway of growth, we are talking about longevity. And gorillas are the longest living amongst all monkeys.
Oh.
So that's why this analogy of gorilla. That's why we say when we try to find stocks with high terminal value, we are trying to find gorillas in the stock market.
Right. So one thing is very clear. While identifying a gorilla company, you're looking for longevity, right? And as per your terminal value framework, you're also looking for companies that offer exponential returns over a much longer duration. But let's break this down a little bit into what does a typical gorilla company look like? What's the blueprint like? What are the key metrics that you use to identify a gorilla? I'm sure there will be a wide array of metrics that go into selecting a bet that is supposed to be very long and sustained growth in to feature long and sustained growth.
Certainly. So we have this framework called LIM, which is leadership, intangibles, and megatrends. When these three things come together, that's when the magic of high terminal value is created. That's when a gorilla stock is created. By leadership means we need the company to have the DNA of a leader. It need not be a current leader, but it certainly needs to have the potential and the mindset to become a future leader. So we're looking at potential gorillas, and that comes from a host of things. It could be the business model itself, it could be the management vision, it could be the hunger for growth of the company. So these are all traits which will help the company sustain growth rates for a long period of time. Resilience, adaptability, because if the management or the promoters don't adapt to changing times, then you don't get longevity. You can get, over a cycle, you can go bust. So all these things, when they come together, that's what the leadership theme comes into play. Second is intangibles. That takes into account a lot of things, like in this age, the intangibles actually are far more important than tangibles, physical assets, right? So we are talking about, say, technology. We are talking about intellectual property. We are talking about culture. We are talking about business models which are different from what others are doing. You may be using technology in a different way.
Correct.
So all the things, brand equity, all the things which are not physically measurable are these days even more important. If you look at the S&P 500, it's actually now S&P 7 versus S&P 493.
Correct.
And all the 7 are intangible heavy companies. They don't have any physical assets, right? The tech companies. So intangibles is another very important. In fact, a study says that almost 90% of the market cap of the S&P 500 today can be attributed to intangible assets. So leadership, intangibles, and third is the tailwind that you need of megatrends. This is tailwinds like demographics, for example, the shift of manufacturing away from China to India. All those long-term trends which obviously help you in your journey as a tailwind. So leadership, intangibles, and megatrends, when they come together, creates a gorilla company.
Very interesting. So I'd just like to double click on the last aspect, mega trends, right? Probably if you could talk about mega trends with a couple of examples, like what are a few mega trends that you're seeing right now, and which themes do you think fit into such a mega trend? It could be themes, sectors, or something that helps us place this concept of mega trends into context.
Certainly. So I'll give you a couple of examples. I mean, on our website, we have a full presentation on it. It's very detailed. Please do go through it. But let's say, for example, demographics,
Correct.
right? How does demographics impact consumption patterns? In 2005, okay, there were about 1 million households, 10 lakh households with an income of more than 30 lakhs, right? By 2018, that number had become 8 times, 80 million households. 8 million households, right? 80 lakh households. By 2030, that 80 million is expected to go up by another 4 times, right? So what we are seeing is that the high income categories are growing faster than the lower income categories. That means that premium consumption items, like say high-end real estate, SUVs versus cars, high-end bikes versus low-end scooters, we can talk about hotels, travel and tourism, and we've seen the template of China.
Yeah.
India, for example, is where China was in 2005, 2007 in terms of per capita GDP. And today the per capita GDP of China is 3 or 4 times what it used to be then. And we can actually see which segments grew faster when the GDP per capita went from 2,500 to say 5,000 or even 8,000. So that is say one mega trend. And similarly, at the next level, if you see the household number is going to go by 3 times. So then you're talking about air conditioners or refrigerators, more discretionary consumption. So those things we can actually almost put a template and figure out for the next 10, 20 years what are the segments that are going to grow faster. So that's one example of a mega trend. Another example I can take is of say manufacturing, right? If you look at manufacturing in the world, first of all, India is the only large country which is going to grow its working age populations for the next 20, 30 years. All the other countries in the world, including China, Japan, Europe, are going to decline in working age population, right? So there is no supply of labor elsewhere. US probably because of immigration will be flat, right? Now, if you look at the size of manufacturing, the world manufacturing is about $11 trillion, right? Out of which China is about $5 trillion. US is about $2.5 trillion. Europe is about $3 trillion. India is 0.5. Right? We are like 5% of the world. Right? 5% of the world currently manufacturing capacity, currently is our market share, and we will add 20% of the working age population over the next 10, 20, 30 years. Right? So by default, manufacturing will have to come to India. So if out of 11 trillion, say 10% wants to come to India, right? We are talking about 1 trillion coming to India, which means our size has to go up from 0.5 to 1.5, 3 times. Right? That's a mega trend. Now we can debate how long it will take us to go from 0.5 to 1.5, but the direction is clear. So those are the kind of mega trends that we are looking at.
Lovely. You very, very well elaborated. Now we have a clear sense of what a mega trend looks like. And also, at this juncture, I absolutely have to ask this question. I'm sure ये क्यूरियोसिटी बहुत लोगों में भी होंगी ये एक सवाल ला रहा होगा कि as we spoke through this conversation, you spoke about identifying longer term trends, trends that will play out in the next 10, 15, 20 odd years that goes beyond the terminal value, let's say beyond 10 years, right? So the most common curiosity that I'm sure many investors would have is, do investors also have to stay invested for that long before they see the returns? If the fund is taking such longer term bets, क्या हमें भी 10, 15, 20 साल का इंतजार करना होगा to achieve those returns that the fund is aiming to achieve, or how does it play out for an investor? What's the right perspective with which an investor must look at this fund and invest in this fund?
Absolutely not. That's the biggest misconception. The difference is that I'm using terminal value, the value of the future profit, the long-term profits, and trying to arrive at a value of the company today, right? So what happens is my perception of the stock valuation is different from the market's perception. Because market typically does not tend to look beyond the next 3, 4, 5 years, right? So what happens in terminal value investing is that because I am able to see that the runway is longer than what the market is assuming, right? I am able to come at a much different, typically much higher valuation for that stock compared to the rest of the market, right? So market is saying the stock is a high growth stock currently, which I am also saying. I'm on the same page. So next 5, 10 years, I agree with the market. But beyond 10 years, the market says I'm not sure. So the market typically, any analyst, if you see the models, they tend to attribute in the DCF model or free cash flow model, whatever they make, they tend to assume a nominal 5-7% growth rate beyond 10 years. Right? That's a typical financial model.
Revert to GDP.
Typical financial model that you make. The difference is there. What I am saying is that the growth rate beyond the 10th year will not be 5-7%, but it will sustain that high growth level for not only 10 years, but 15, 20, 25 years because of the XYZ 1, 2, 3 factors that I am looking at. So I will be able to attribute a far larger value to the company, which means that my conviction in the company will be much higher today. So in my view, not only will the company deliver in the near future, but in my view, it will continue to deliver beyond 10 years also. That's the difference. So you end up making very good money in the short term, but you end up making stupendous money in the long term. That's the difference. You're not compromising on the short term.
Oh, fantastic. So this works both ways, even from the medium term perspective to the longer term perspective. It's then in the hands of the investors. You can position it however you want in your portfolio, but this is meant to play the shorter as well as the longer innings.
So we say
at
that
the same
it
time.
helps us in all the three aspects of investing. In investing, people only talk about buy and sell,
Yes.
right? So in buy, it helps me buy with greater conviction,
Yes.
right? Because I have a different perception from the market. So I will not buy a small quantity.
Correct.
I'll buy a
Yes.
big quantity, a reasonable, a good amount of exposure to the portfolio. So that's one. So it helps us to buy with courage and conviction,
Correct.
right? Second is, on the sell side, because I already know what the maximum potential is, I know when valuations go insane.
Yes.
Right? So I am able to sell also at the right time. Or if my original thesis goes wrong, then I sell in any case. Doesn't matter what the valuations are, right? So because I'm clear about my thesis, and you keep testing the thesis at all points in time. So buy and sell is very clear, but people ignore the hold part, and that's where the maximum money is made.
Yes.
So the benefit of terminal value investing is that it allows me to hold the stock for a long period of time, because I know that I'm not buying it for a 50% gain or 100% gain, because my thesis is still panning out.
Correct.
Right? So it allows us to hold for long period of time to ride the entire multi-bagger market cap creation. Second is, it allows me to withstand volatility. When the stock fluctuates by 10-20%
Correct.
for no reason whatsoever, it's the market,
Yeah,
right?
yeah, absolutely.
I won't sell in a panic. In fact, I might add if the stock goes down. So that's the advantage of having a TV view on the company.
Amazing. So towards the close of this conversation, एक आखिरी सवाल है. I'm sure yet another question on behalf of the audience. The fund's launch coincides with such a beautiful period where markets are at almost all-time highs. At least the bellwether indices are very close to it. And there will be one question on all investors' mind: is this the right time to invest in funds altogether? And even if not just funds, let's talk specifically about the FlexiCap mandate that you're running. Is now the right time? How should an investor, take this fund into consideration and context of the broader markets?
Certainly. So, it's always the right time to buy stocks, because I don't think the allocations that we are getting are incremental allocations. People are anyway investing in stocks, so we're getting a part of the flow in any case. But second is, in my view, there are about 900 stocks in the market which are relevant. 900 to 1,000 stocks.
Correct.
Right? And out of which, of course, 100 will be large caps, next 150 are mid caps, and then almost 700 more stocks which are small caps. So I think there is a wide range of stocks to choose from. There is enough scope for stock picking. Obviously, one year ago there were far more opportunities, but it's not like there are much fewer opportunities today, because if we are talking about 5-10 year kind of a view, then there are so many stocks and segments which will continue to grow fast.
Correct. So it doesn't matter what the market's looking like right now. If you believe tomorrow is going to be brighter than today, there's no reason why you should not invest today, right? As long as you believe that growth is going to come in. So this brings us to the close of this conversation. I feel it was a wonderful conversation, super insightful. There were several takeaways for me personally. I am looking forward to this fund and seeing how does terminal value investing play out in the scheme of things. I'm super excited and wishing you all the best for the fund. I'll be looking at it very closely, and I'm really optimistic about the outcomes basis whatever we have spoke right now. Thanks a lot for indulging in this conversation and sharing such perspectives.
Thank you so much. It was a pleasure. Thanks for having me here.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.